Good evening, everybody. This is Ron Wheeler, Manager of Options Trading here at VectorVest, and it's my pleasure to bring you tonight's special presentation about creating consistent income, but we're going to do this using one symbol with one trade type and one set of rules. Now, this trading strategy or income approach comes from our bulletproof system that we can perform in 15 minutes a day. But you know what? I'm going to make this better for you. Instead of doing a 15-minute a day bulletproof system, how about we shorten this down to only 15 minutes a week? And I'm serious, this trade does not require a lot of work. One of the biggest questions that people ask me here as the options coach here at VectorVest is, Ron, I want to implement these income strategies to my portfolio, but I'm worried that I'm not going to be able to find trades easily. I'm worried that it's going to be like a needle in the haystack. There's all these different stocks, thousands of stocks and thousands of options. How do I know what to do? I'm worried that it's going to take me a lot of time. I already have a job. I don't want to create a second job trying to create income. Well, let's narrow this down for you. A successful income trader has a strategic plan. We start with market direction. Market direction sets the tone of our trade. If the overall market is bullish, we're going to trade income for bullish. If the overall market is bearish, we trade our income approaches to bearish. That's pretty easy, and that can be done very quickly. Where it starts getting a little bit more time consuming, and with the right tools, even this isn't very time consuming, we have to start looking for stocks. VectorVest makes this very easy, of course, with our Unisearch, but we still then have to work on the option side. We got to work on different options analytics, and it can be a little bit tedious if you don't have the right tools. We then have to set up the trade. There's different variations in probability, trade management, and this is all magnified and made easier by a tool for speed and efficiency. But let's do this. Let's simple this. Let's make it as simple as we can. By reducing all of that work to one market, this can be done in, like I said, as little as 15 minutes a week. It is that simple. So we're going to do that income approach that I just showed you on one symbol. Now, how do we trade the S&P 500? Well, you're probably familiar with the S&P ETF, the SPDR. This is an exchange-traded fund. You can buy the stock. It pays dividends. You can also buy options on the SPY. Those options can be assigned to you and converted into the SPY stock. You can sell options against it as well. What we're going to do, however, instead of using the SPY or the SPDRs, we're going to use an index option, the SPX. Now, these are settled in cash, so there's no stock transaction that can ever occur. These are all cash settled options. So that has no fear of early expiration or early assignment. So I took a screen capture right off the CBOE's website, and these are some of the benefits of trading that SPX option. As I mentioned, really the first one is that cash settlement, what they call a European exercise. You don't have to worry about being settled early or assigned early. There's no risk of this in this type of trade. Now, another benefit I like about trading the SPX is the second one down there, and that's this large notational size. A lot of clients that come to me, they worry about commissions. Well, commissions are a part of doing business. The nice thing about the SPX is they have a large option premium. This means that you can create a good amount of income with a lot smaller trading size. I don't have to trade 100 contracts. I can trade 5 or 10. Now, the next biggest benefit, and this will affect some people and some not, if you are trading this outside of an IRA, in the lower right-hand corner, you see the 60-40 tax treatment. Let me expand on this a little bit more. Now, we are not tax advisors here at VectorVest. Consult your tax advisor for this, more information on this. But as a very quick overview, trading those SPX options, it's under Section 1256 of the tax code. These may qualify for 60% long-term, 40% short-term rates, even if the option is held for less than a year. So it gives you a nice tax benefit to this as well. Now, For those of you that have gotten this far, you may think that, hey, Ron, I've seen this before, right? You've talked about the SPX system with us in a strategy of the week, and you're absolutely right. Back on January 31st, I mentioned another SPX system that we do, and that is a longer-term variation of the SPX. We actually teach multiple SPX systems because we want to make sure that we have a system for every trader and every style. Now, I'm going to cover the shorter-term variation of that trade tonight. So that begs the question, well, Ron, what system is better? Should I do the long-term or should I do the short-term? Listen, they're both great systems. But I want to concentrate more on the shorter term tonight, and I want to talk about some of the advantages that it has. Well, number one, there's no trade repairs. I don't have to worry about adjusting an options trade or repairing it if it goes against me. There's no trade repairs. You simply get in or get out. You either make money or you don't. Another nice benefit here is trades are shorter term. They're no more than 7 calendar days. So, for instance, if you're a busy professional and you put a trade on Monday, that trade will not last longer than the following Monday. If you put a longer term trade on, it may last 2 or 3 weeks. Now, to some of you, that may not be a problem, but if you're going on vacation or if you know that you can't hold a trade that long because of your work schedule, this one has a fixed maximum time. This trade also has a much better reward to risk ratio. As an options trader, we definitely don't want to be risking thousands of dollars only to make 50 bucks. This trade has a very good reward versus risk ratio. Now, another great thing about this trade is for some brokers, these orders can be placed ahead of time. So you can place an order with your broker to take profits for you automatically, and we can also place an order as a stop. And again, most brokers can do this. Not every broker can, but most can. All right. Now, how do we actually do this? How do we implement this? Well, as I showed you earlier, we have a plan in place, and that plan starts at the top with market direction. Markets can go up, down, sideways. We need to find a way to look at the market overall and know what to do. Do we go bullish or do we go bearish? Well, one of the great benefits about VectorVest is we have strategies and styles that really fit to any investor's needs. We have trading signals like the primary wave all the way out to the confirmed call. What I have found in these 7-day trades is that the DEW in VectorVest provides a great timing signal for the S&P 500. In a DEW up, we go bullish. In a DEW down, we go bearish. So that sets the tone for which direction we're going to take these trades. Now, the next thing that we need to do, we need to go out there and understand we're going to be doing a trade that has a higher probability of success. In order to do this, you need to make a strategic shift in your mind. We are going to be an option seller. We are not going to be a primary option buyer. Not that there's anything wrong with buying, but if you want to create income, if you want to create a trade that has a better than 50% chance of success, you need to be an option seller. So let's take a closer look at what I mean. If you take a market, whether it's the S&P 500, the Spider, or any stock for that matter, if you buy a call or you buy the stock, strictly from a statistics standpoint, you have a 50-50 chance of success. If the stock goes up, you make money. If it goes down, you don't. Okay? You have a 50-50 chance of success. What I want to do is put together a trade where we can put this into our benefit. I want to create a trading strategy where I have more probability than 50%. So here's how this works. If you're bullish on the market, what we're going to do is we are going to target option strike prices that have 35% probability of getting hit. So we are going to sell an option strike that has a 35% chance or less of getting hit. Now on the S&P 500, you can kind of see what this means. What I do by doing this trade now is if the stock goes up or the market goes up like I think it does or think it will, I can be profitable. If the stock goes sideways or the S&P goes sideways, I can still make money. As long as it stays above our strike that we sold, we can still make money on this trade. And what you're doing is you're now swinging that probability into your range. And we're doing a 65% probability based on the statistics of the option. Now, if you're bearish, there's really no difference. We're going to do the exact same philosophy, okay? In a bearish market with a DEW down, I'm going to choose an option strike that has a 35% chance or less of getting hit. That gives me a 65% chance of being profitable. Now, we throw out these things like option statistics. Well, Ron, that's option statistics. How does that really correlate into real trading? Well, over the last 4 years, this system has had a 60% success rate. So that 65% theoretical options probability has actually translated into a good 60% rate. Now, once we have this trade in place, we need to implement our next step. And that's not being greedy. We need to manage these trades appropriately, right? It's like that game show, Deal or No Deal, right? They go all the way to the top to $1 million or $1,075,000. The questions get harder and harder and harder, right? Well, the best thing to do is cut your losses, if you will, and take the money at $50,000 to $75,000 where you have that highest chance of success. Well, we're going to do the same thing with these trades. We are going to exit the trade at 50% profits. Now, what does that mean? This is a risk graph. Now, a risk graph is how we watch the profits of our trade. Now, here's what I want to show you. This dashed line that you see, and I'm going to bring out my little laser pointer here. This dashed line represents how much I'll make on this trade as the S&P 500 goes up or it goes down, okay? So what you'll see is for this trade, which is already up $275, for me to make 50%, the S&P only has to go up to about right here. And that's about 42.15 based off of what I'm guesstimating right here, okay? That trade can then be exited at 50% profit. Now, I want you to take a look at that line and see how much farther the S&P has to go to get you up to almost 100%. The S&P would have to rally to 42.80 or so to get that second 50%. History, through a great deal of back testing, has shown when you do these types of trades, taking profits at 50% offers you a higher success rate, and it actually makes you more money. Now, I realize internally that might be a conflict, right? Well, Ron, how do I make more money by taking profits sooner? Well, it all comes down to this. By being greedy and trying to capture more profits, that means you have to stay in the trade longer. The longer you stay in the trade, the more that trade has a chance of then going against you. That's what it all comes down to. So we take profits at the first 50%. That means if I have a trade where I take in $1,000 in credit, I'm going to look for a $500 profit on that trade. Now, we also have to have a plan if the trade goes against you. You have to have a plan in place ahead of time and be prepared to act. What we do is we simply exit the trade if the S&P 500 index falls below the strike price that we sold. Now, as I mentioned earlier, we can place an order ahead of time for this in most broker platforms. So let me kind of show you what that looks like as of a trade that I just took recently. This is the S&P 500 as the current market was. It was about 41.87. We're basically down here at around 41.50. We have a nice 7-day range for this stock, or the S&P 500, to really stay above that range. Now, why do we exit if the trade goes against us? Here's why. We have to control our risk. The enemy of any income trader is to take losses that far exceed the average gain. Have you ever heard a horror story about trading options, specifically selling? I've heard them. You know, Ron, I was an option seller for 6 months and I made so much money, but then you know what? I took 3 trades and it wiped out all of my gains. If you did that or had that happen to you, you have a flaw in your trading system. You should never take a trade where that risk is present, because what you learned is that as an option seller who does not do this properly, one bad trade can wipe out a bunch of winners. Now, when we exit these trades properly, I want to show you what it looks like. I exit the trade if the 41.50 price is hit. That's the option that I sold. So if the S&P were to sell off to 4150, our true risk on this trade is $635. Guess what? Our profit target on the trade is a little over $600 as well. That gives this trade a near 1-to-1 risk to reward ratio with a 60% chance of success. Now, if you're like most people, you're probably in the mindset of, Ron, well, why don't you prove it to me? Prove that that's the case. Well, let's talk about that. These are the trades using this short-term SPX system since January 2020. So that's 16 months. Over the past 16 months, we've seen a 60% success rate, a 0.92 reward to risk ratio. That means for every dollar you're risking, you're making 92 cents, and a 32% rate of return. Now, if you look up here under the profit or loss, that shows $1,620. How am I getting a 32% return? I'm basing that off of the account size you need to make that money. In order to make $1,620 since January 2020, you would have to have a $5,000 trading account. Well, Ron, I have $50,000. Can I do this? The answer is yes. That's the beauty of the SPX. If you traded $50,000, you could trade 10 contracts. And guess what? Your return would go up to $16,200 with basically that same rate of return. Now, that was since January 2020. How about we go back a little bit farther? Let's take a look at 2019. Well, guess what? In 2019, I had a round. It was a 62% success rate with a 0.95 to 1 reward to risk. That means for every dollar we risked, we made 95 cents. And that had a 36% return for the year 2019. Well, how about a year, Ron, where the market wasn't all that great? Well, 2020 actually wasn't that great, but we still were able to make money through 2020 and into 2021. But what about 2018? The market was kind of crazy that year, right? Well, here's 2018. We did have a little bit lower success rate. We were at 56% success rate, 29 winners, 23 losers. Our average trade, however, the average win was $157 per contract and the average loss was $154. We actually had a 1.01 to 1 reward to risk ratio, and we still managed to make a 20% return. Now, in an average year, there's going to be about 50 to 52 trades depending on how the weeks work. So if you take a look since 2018, that's 101 winners and 68 losers, averaging out to both a 60% success rate and an 89% return on investment. And you can do this again for as little as $5,000 a contract. So if you like what you see, if this is intriguing to you, this is what we teach in our Options Paycheck class. We're launching a new one starting in May. I'd love to have you join us to learn this SPX system and our other SPX system, and then also how to actually put this in place on stocks as well. It's a 7-week, 7-module course. We go all the way from the beginning of basic options building. So if you don't know what a call or put is, I'll show you how to use them in your trades. I'll show you how to make money in rising markets and falling markets and neutral markets through modules 2 and 3. For those of you that want to employ this on stocks as well as the S&P, I'll show you in module 4 how we find the right trades using VectorVest. I'll also introduce the index trading in module 4. Module 5, we'll talk about setting up the trades for the maximum chance of success and the maximum rate of return. Module 6, we'll talk about the trade management. How many contracts should I trade? How many trades can I have on? My portfolio size, how much should I be risking? And the trade execution planner in module 7, I'll talk more about the broker of this. Now, this is delivered live and via recording. So if you can join us for the next 7 weeks live, that's great. If you can't, we also record it as well. Okay. Now, I'm also going to include some bonuses. You just saw about the SPX tonight. I'm going to include what I call the SPX paycheck. That one trade type, one ticker symbol, one setup rule, one profit rule, one stop criteria. That's going to allow you to implement this income approach on that one symbol. I'm also going to do 7 mastery support sessions. There's 7 live modules. I like to do a mastery class for those. That means you come with me, I make sure I take you by the hand, and you are actually ready to implement what we have learned in each module. We have a private Facebook community that you can join if you'd like. It's not mandatory, it's optional. You get into a group with the other students in there and our instructors as well, and we can all help each other get success as fast as we can. I'm also going to include 7 weeks access to my members only group coaching. Every week I do classes on the S&P 500, also finding stock trades that go along with our income approach, and I'm going to give you access to that for the next 7 weeks once the live curriculum starts. I will also give you 7 weeks access to the software we use. If you're already a VectorVest 7 client, of course, you don't get that, but we also will give you Options Pro if you do not have it. This is the tool that we use here at VectorVest to do these trades in a very time-efficient manner. Now, if you're new to options and you're worried that this might be a little too high level for you, we are also going to include a streaming options foundation course. What this will allow you to do is brush up on your basics of options. That's going to allow you to hit the ground running when the live curriculum starts. So a quick summary of the offer: you're going to get the full paycheck course, 1 year access to the digital archive, the SPX bonus, mastery support sessions, weekly coaching with our trade recommendations, access to the Options Pro software, VectorVest if you don't have it, the Facebook group, and 12 months of Q&A, and then also that basic options foundation course. Now, before I talk about the price, I also want to let you guys know that this does have a 100% money back guarantee. I like to put, my money where my mouth is. If I can't show you how to create a successful income approach to your portfolio, you do have a money back guarantee. I'm willing to take the risk because I think that you will be satisfied and really enjoy what you see in the options paycheck. If it's something that you're interested in joining, you can go to www.optionspaycheck.com, click the big orange register button in the upper right-hand corner, and in the next 7 weeks, I will create an income system in your portfolio, even if you've never had success with options. So www.optionspaycheck.com. I look forward to seeing you in our May class, and I want to thank all of you for joining me for our special presentation tonight and wish you the best of success in your trading in 2021. Thank you, and good night, everybody.